Alright, yes guys, welcome to the trade recap of the trade that I took today on Monday, 7th of July. And I'm not going to lie, the price action recently has been a little slow. If you found it slow over the past 2 weeks, drop a comment on this video about your experience with the price action over last week and the week before, because we had NFP and also July 4th for a US bank holiday on Friday as of last week. So it's been relatively slow, bound to pick up. The next 3 weeks of price action actually looks relatively clean on the economic calendar, so we will see what we get. Today in itself was rather slow, but we took the correct trades and came out for a minus 15 handle result on the day. I took one losing trade in the first day of macro for a long, and then I took a winning trade inside of lunch, which did not run to TP because Trump, out of nowhere, decides to release tariffs on different places. I didn't even know what it was about, but I heard that tariffs was intervened, and that's why it came to my trading stop. So I only got around 15 handles after losing 30 points, so I'm down 15 points on the day. The trade was going to go TP, but Trump decided to kind of cut it short. Let's run over the trade and the thought process of the trade that I took inside of the lunch macro. So going into the lunch macro, you can see here that we do have a clear SMT at this point of sell side, and price is already in a deep discount on the higher time frame, and we've already swept major points of sell side such as London lows and also previous session low, which was on Friday. So previous session low, London lows has been swept, and price is actually traded into. If we head on to the 4-hour time frame, you can see that trading out of the 4-hour bearish gap, the draw is going to be the next low. We met the next low, and the 4-hour actually then was still inside of the 4-hour bullish gap. Therefore, we're going to assume it gets respected and take a 4-hour bullish bias. On this day, the daily was actually neutral, as we was already taking the previous daily high. We're not actually inside of a bearish or bullish imbalance on the daily, so we're not going to take any bias there. With the 4-hour being bullish, if you look on the hourly time frame, we're currently not inside an hourly bearish gap. We're actually traded into an hourly bullish gap. Therefore, we're going to take an hourly bias to be bullish there. Now, if we head on to the 15-minute time frame as we drop lower, you can see we're not actually in a 15-minute bearish gap going against the trade, which is fine. We're also not even trading out of a 15-minute bullish gap. So the 15-minute is relatively neutral. Now, on the 5-minute, you can also see that we're not trading out of a bearish gap or a bullish gap. So the 5 and 15 is all over the place at the moment, and we don't really have a bias. Only the hourly and the 4-hour higher time frame is leaning towards a bullish bias, which is enough. Now, the sweeper liquidity was all of these lows here, which you can see. And if you look on ES actually took way more of these major lows. So if we actually reference the trade, because when you're backtesting on TradingView, ES does not backtest with you. Only one pair will backtest. This is why I do much recommend TradeZella for backtesting. I don't affiliate with them, but I'm just saying they are the best website to backtest on. TradingView is definitely not a backtesting tool website. It's only for live trading. Now, the trade was inside of the lunch macro, and we actually swept this low. So you guys can see here at 6.55, we created this low. NQ did not take this low. It almost did, but it didn't. Now, ES actually took that low, which you can see there around 12, and that's what created the SMT. There was also a lower time frame SMT there as well. So if we go onto the 1-minute time frame, and you can see here on the 1 minute, right, if we go to time of entry on ES, which was here at 12, now you guys can clearly see between this low and this lower low, and then this low and this higher low, you can see that's the SMT between NQ and ES. Therefore, we have a bullish SMT on NQ. Now, with our bullish bias, we've already swept liquidity. Then I've seen that inside of the macro, we do not need to see a displacement or the gap be created inside of macro, as long as the entry is inside of macro. The model itself can actually form outside of macro, and then you can execute as long as it's inside of macro, right? Now, we displaced higher above that short-term high. This is going to be a bullish breaker block to the left, which is paired with that fair value gap, which was my entry point. I call an entry at 11.59. So let's fast forward price. Let me put this onto a 1x so we can slow it down a little bit and you guys can see the entry, which was this one. That was my entry. Then price takes the short-term high. I want to explain to you guys about stop placement on this trade, because you're probably going break even, right? No. Well, this short-term high is actually very, very close to break even. Matter of fact, 5 to 7 points. So if you do go break even, common sense is that it's likely going to come back to break even for another entry. It's too close and too aggressive to trail stops that tight, 5 points, right? So we caught an entry there. Now, stop placement was around 30 handles. I ran my stop below anything that will send price in favor of our trade. We have this bullish gap, so I ran it at the low for around a 22 handle stop in this case. Now I'm looking to target the first 1 minute high that gives me a 2 to 1. In this case, the first high that gives me a 2 to 1 is that 1 minute high there. So I labeled this out as minor buy side, and then you can also reference this on ES because it's very important that you monitor both NQ and ES even for when it takes TP, because if ES takes this high, what do? You close out. So if we reference this quickly, I'm getting a bit lost on the charts here. You can see that 1 minute high is indeed going to be that one. So if ES was to take this high with you being in a long position, you're going to make sure that you do close out of that trade prematurely on NQ. Yes, you didn't make the desired profit on the trade. Say if you're aiming for 60 points, you may only get 45 or 48. However, why have an SMT in favor of your trade to take a long then when you have an SMT going against your trade because ES took the high, so you have a bearish SMT on NQ against your trade? Why are you still holding, right? That's why we reference TP. If ES was to take the objective, then we close out on NQ there. Now, we caught the entry at 11.59. Price takes that short-term high. There's two scenarios what you can do. You can do it on the more safer option, which is what I did, of the fair value gap that was created for our entry. I just trailed stops on 22 points and I just put it at the body candle low of the fair value gap that created for our entry, right? Or scenario 2 is that you just go to that previous short-term low. So it's around a 7 handle stop, but definitely not break even as it's relatively too close. So upon taking the high, I went to the body candle low of this candle, which was the fair value gap I entered from. Now, as price moved higher like this, and we had a strong closure, I went to short-term low, and then we created this fair value gap here, which you can see. Now, in a bullish trade or a bearish trade, it doesn't matter what trade you take. If you create a fair value gap after your entry in favor of your trade, then that gap should be respected. In a market maker buy model, every bullish PD raise should get respected until you meet the final objective, which is going to be here. Obviously, Trump had different thoughts at time of seeing me take this trade. Potentially, he was watching me trade live, and he said, you know what, let's drop some tariffs, and then he hit my trailing stop, right? So I seen the fair value gap get created. Price should not inverse that gap or even come really below it. It could potentially, but what I did in this case is move stop straight to break even, so it's completely risk free. Let's put this on a 3x. Okay, price trades back into that gap, gets respected. Now we take the next short-term high. So what I did in this case is actually trail my stops to the most recent short-term low. I went more aggressive on trailing stops. I marked out this short-term high because if we was to take this short-term high, this was my point that I'm aggressively going to trail stops. Price does come relatively close to that area, but doesn't actually take it. So you'll see in a second, we create this bullish fair value gap here after taking that high as well. Now, after I seen price create this bearish gap, obviously I want to see it get inverse and take out the next high. As of now, I've got my stops at this low. If we take the next high, then I can put my stops at this low at 14175. Okay, perfect. So that's when the tariff came out. As you guys can see, we had a pretty big reaction for price to draw lower. Matter of fact, price didn't move that much in this 1 minute candle the whole of the New York AM session. And what you can see for price, we there or thereabouts created equal highs and relatively took that high. As we actually took that high, I moved my stops to the body candle. So I moved my stops to the low of this wick here. So my stops are trailed in a profit. Not much of a profit, and price would have went to TP, and then obviously Trump came out of nowhere, and that's the price action we've been experiencing recently. As we get into the summer months, obviously it's only just started. You can't really expect the best price action. What can you expect? Well, it's usually relatively just a little bit slower and a lot more lenient on stop placement. So instead of trading inside of March where we're risking 30 handles every single trade, inside of the summer months you'll see a lot of trades where you can actually comfortably risk around 13 to 15 points per trade, which is quite nice for people who are new to trading ICT, right? Now, as I said, the next few weeks are actually good on the economic calendar, and we should expect some pretty clean price action. Obviously today is Monday with no red folder news, so you couldn't really expect too much, and we're sitting around minus 15 handles on the day. I've just come out of a 7 trade win streak, which was pretty interesting, and also the last 14 weeks for myself have all closed in the profit. Inside of those 14 weeks, I did have one break-even week, but I count break-even as relatively a profitable week because the break-even week was actually up plus 2 handles. So I know it's not really a winning week, so I classed it as break-even. It was plus 2 points, right? So I've had the last 14 weeks to close in the green, which is obviously good. I don't look at the result of each trade. If I get stopped out, but I had the correct thought process and the correct process to take in the trade, that's fine. It's a winning trade. The point when you have a losing trade is if you take the trade, doesn't matter if it hits TP. If you did everything incorrectly, then repeat that in the future, you're unprofitable. That's a losing trade. Even if you make money on that trade, you'd have better luck gambling in the casino than actually trading with no model, right? Hopefully you guys have found this trade recap useful and insightful. If you have, make sure to drop a like and a comment for what you want to see in future videos on this channel. If it's your first time hearing my voice on YouTube, make sure to subscribe, as we are on the road to 100,000 subscribers as of this year. You may not believe it, but it's going to happen. Now, other than that, I'm going to speak to you guys tomorrow for the AM session. Have a great rest of your evening.